Bitcoin is back to 116K, and I've been having some really interesting conversations both with friends who are deep into the markets and even with my dad who's been investing for a long time but not in crypto, in properties and gold. And we are all coming up to one big idea that we might be living through the greatest macro trade of our lifetime. Not in tech, not in stocks or real estate, but in gold and crypto. It sounds wild, right? But when you zoom out, you look at what's happening globally with inflation, debt, the currency issues, it starts to all make sense. We're living through a massive shift in the economy, in global economy, one that feels like the early stages of a new era. Central banks have been printing money for years. Governments are carrying record high debt, and the value of fiat currencies, dollars, pounds, euro, it keeps eroding. So the question I keep asking here is, if money itself is losing value, where do you put your wealth, or where do you store your savings? That's what got me thinking about storing a value, assets that hold purchasing power even when everything else around them changes. And the two assets that keep coming up are gold and crypto, in particular Bitcoin. And I was talking to my dad the other day who doesn't believe in crypto, doesn't believe in Bitcoin. He's from generation where gold was the safe haven, something tangible, rare and trusted. But for us, like the younger generation, Bitcoin feels like the digital evolution of that same idea. It's also scarce, is decentralized, and instead of sitting in a vault, it lives on a global network. When you really think about it, gold and crypto are just two sides of the same coin. Gold is the physical store of value, and crypto is the digital store of value. And both benefit from the same macro conditions. When money is cheap, when debt is high, and when people start questioning the system. This is where these two assets benefit. They're not enemies, they actually complement each other. And the potential upside with crypto, with Bitcoin in particular, massively outweighs the downside. If crypto only partially achieves its potential, say becoming a core part of the global financial system, the returns could be enormous. But even if it doesn't fully play out, the downside is capped by how far adoption has already come. Gold, on the other hand, probably won't do 10x or 20x, and it doesn't need to. It's the stabilizer. So if you hold both, you've got one asset that keeps you grounded, and on the other side, you have an asset that gives you explosive potential. And that's a really smart combo in a world that's shifting very fast. And what matters for crypto to unlock this massive potential is liquidity. When central banks add liquidity through rate cuts, one is coming up just in 3 days, or money printing, assets prices usually go up. When they pull it back, everything tightens and markets fall. We've been entering another expansion phase right now with more liquidity coming into the space with the interest rate cuts that are coming up. And historically, that's when assets like gold and crypto tend to outperform everything else when liquidity is coming back. And it's not just about hype, it's how the entire system moves when money becomes cheap again through printing and through interest rate cuts. And just talking about this new era, what really is becoming fascinating is that crypto is becoming institutionalized. A few years ago, it was just this niche thing. Now you've got BlackRock, you've got Fidelity, and you've got big banks building crypto products and ETFs. That means massive amounts of institutional capital, pension funds, insurance companies, whatever, they're starting to enter the space little by little. And this isn't just, retail speculation anymore, like me, random YouTubers talking about crypto. It's becoming part of the mainstream financial system. So even if adoption takes time, the direction is clear. The walls between traditional finance and digital assets are coming down, and it's merging into one. And that's the positive. I'm just talking about it as if there is nothing negative. No, it's definitely not all sunshine. There are real risks, and a lot of risks associated into investing and crypto in particular. The biggest one being regulations. Governments could change the rules overnight, and volatility is just part of the crypto's DNA. Price swing hard, you've got to have the stomach for it. You have to have the emotional stability and to be prepared to go through this emotional roller coaster. So when I look at the long-term picture, the trends in debt, demographics, technology, and trust, it feels like the world is slowly being pulled towards this new financial reality. Gold gives you security, crypto gives you growth, and together you would find that balance. But again, always be cautious of the risks. It's not that easy, it's not that shiny as it always looks. And I keep reminding that to everyone who is coming into the crypto space. It's not as easy as it looks. And let's see how we are doing in the space today. We added 2 new picks to our portfolio. We are adding a couple of more picks. If you want to see what we're buying, what we're selling, feel free to join Discord. All the signals are available there together with latest information, market research, technical analysis, the latest crypto indicators and market sentiment to help you navigate through the market and make informed decisions. So looking at the fear and greed index, we are in the neutral zone, more on the fear side, but prices are not so low. I personally think that in the next 3 months, we're gonna reach the stage where those who invested last year or earlier this year would be able to take profits finally. Those who came in late, I would say last December, or they came in a couple of weeks ago, you might have entered on a slightly different prices. So you have 2 choices here: either wait until the next bull phase or whenever your projects are pumping, or you might even want to consider DCAing or taking some portion out and reinvesting it. There are different ways to go around it, but again, you need to do some research and have a strategy in place. Without strategy, you're not going to make it through. You need to know what you're doing, and even before you enter the market, you need to know when you're going to exit. So we are still in fear. We need to move to greed, extreme greed, for us to start taking profits. Right now is still a good time to keep investing. Prices are cheap. You've got SUI at $2.60. You've got SEI at 20 cents. A lot of cheap prices. Casper is on a discount. Everything is on a discount right now. And let's see crypto bubbles. We see Virtual still being one of the big bubbles. Pi Network. Zcash is doing pretty well. Dash. C is a very small bubble. It's consolidating. Aster has dropped a little bit. For those who are interested in Aster, now is a good opportunity to enter at just $1. That's a cheap price. You see the chart is very bullish chart, and I personally see Aster going higher in the short term. The Binance CEO stands behind this project, so it's definitely going to go further than it is right now. If you're wondering and you want to ask me if it's too late to buy, no, it's definitely not too late, and now is a good time to DCA or buy. That's from me today. Thanks so much for watching. I'll see you in the next video.